What's going on, everybody? Just wanted to update you all regarding the crypto market. As you know, I've been saying this forever that whatever Bitcoin does, altcoins will do, but more intensely. There are a couple of exceptions due to like news events and shit like that. But for the most part, Bitcoin's the head of the snake. Everything will follow. Bitcoin's dumping. Pretty much everything's dumping, right? Okay. Anywho, so yeah, this falling wedge finally played out. Uh, the weekend was such a tease. So on Friday, it broke out, confirmed, right? Bounced off of the 21 EMA for a little while. I actually retested the top of this falling wedge, the top side resistance, but immediately got rejected. This is kind of like the line in the sand right here at 21.672. And yeah, back tested right here. Yep. Confirm that as resistance. So what's going on here? So this is a 4-hour chart. So each candle is 4 hours of price action. So this shit's like a day. All right. Yeah, this is like a day and 8 hours. So if you don't have patience, I highly recommend you stay away from long-term charts, right? Or just charts in general. You got to be super patient, okay? Because there's people here that like are, oh my god, you got to scalp the 1 minute, you got to scalp the 5 minute. It's like, no, dude, like that's how you get freaking wrecked, okay? Traditional traders like hedge funds, banks, they're trading assets, right? Like oil, stocks, etc. on the daily, on the regular. And they don't go lower than the 4 hour, right? That's like fast moving time frame stuff for them. A lot of traditional are going on the daily chart, right? So all this stuff that I'm doing is like quote unquote crack trading, where it's like fast action, especially it's because it's crypto. But anyway, yeah, I like to use the 1 hour and the 4 hour. Personally, my indicators have done pretty well in that regard. They've kind of held strong, held through. So anywho, yes, so how falling wedges work, usually there's a bounce as a higher low base. Uh, so I'm kind of expecting some reaction at 20.25. But ultimately, they usually go back to the base, which is right around here at 20K. Uh, the higher term 19.8, 19.9K marks. Volume did break out. It finally broke out. If you look at it's ever so slightly, it's kind of difficult to see. Okay, there you go. But I was kind of like looking at this for forever, okay. I'll just put it white. Yeah, so top side usually volume kind of like slowly but surely wanes, and then when you see that spike, it's bearish, right? And lo and behold, it happened right here on the largest bear candle. This is what you call a bearish engulfing candle. Not only was it a bearish engulfing candle, but it's changing the EMAs from green, basically from support, to red, which is their now resistance. So you look at the 9 EMA, which is the yellow line. Let me turn off these candles here. So then this is the 9 EMA, the yellow one, which is the fast moving. So when this crosses down, and this is the 100, the more slower moving one. Yeah, this is the 100. When the 100 goes red, that's not good. That's not good. And there, well, if you're a bull, right? If you're a bear, I mean, yeah, this is, exactly as predicted, quote unquote. But yeah, as a long-term investor, you should be excited because I think we're about to see lower prices. Um, Now, I was looking at the supply line, right? Multiple touch points, broke out, faked people out at the top side at 21.8, and it was the weekend, so I knew there was going to be some shady stuff going on. Because I mean, like, I'm going on the market cipher indicator here. I like to use the Heikinashi version because the money flows are just thicker and easier to read. But yeah, like I was looking at divergences, the red dot divergence. bearish divergence, bearish divergence, bearish divergence, bearish divergence. I was like, this is going to come down eventually. This had to come down eventually. And it did. It finally did today, or last night. Uh, yeah, I mean, we're kind of having some bounces, right? We're getting a buy signal on the 1 hour, but I would really refrain because money flow is turning red after a long sustained green. And if you just look at the overall money flow volume, the red has outweighed the green. If you just zoom out, there's like thicker, deeper, you know, um, yeah, it's just not good. It's I wouldn't long this right now, especially with price under the 100 EMA. My expectations is that uh, these lines are now going to be considered resistance. Um, so I mean, you could see a 1.6% pump to the upside. It might even go over, but there is now history of a lower high. Okay, lower high, lower low. It's not good. Uh, falling wedge, not good. Okay, multiple actually. You could even argue. I know this kind of looks a little wonky. It's like, oh, falling wedge, falling wedge. This you could argue that this is a big bear flag. Seriously. If I just connect that, you know, this could be just a big bear flag right here, right? So that's not good as well. But there was support. Well, not was, is. There's support all the way down here. There wasn't a bounce, right? So there is an opportunity for the bulls to step in and create a higher low at 20.25. Big if, right? Big if. But there is opportunity for uh, that to happen. But really, usually, I kind of consider the falling wedge to be right around here, with consistent lower highs. Frankly, we're closer to resistance. This is my support and resistance indicator, the yellow lines. You see that? All right, anyway, this is resistance. Like, we're closer to resistance than we are to support. And this yellow line is not actually, I'm going to delete, hold on. I don't like it. Oh, that is support. Nice. Okay, cool. I'm just tripping. Alrighty. Yeah, this is support here. Okay. Now, the 1 hour, the way this works usually is, yeah, there is a support line right here, but what I've come to notice when this happens is that it breaks down and it flips this as resistance. This is just like a dead cat bounce. And then this is now resistance. So then it comes down and creates a new line and then, kind of descending. So kind of like this, right? You'll see right here. So it's like, okay, there's support, it'll bounce, find rejection, bounce, continue bouncing. The real indicator regards to the exponential moving averages is the 100. So when price is below the 100, you do not want to be in longs or, in a bullish bias. This is now bearish bias, where people are waiting, setting up for the price to go higher to then short. Okay, so like exit liquidity style. Okay, it's not a bad thing. Like I said before in the previous video, that I frankly preferred this to go down. I thought we're overextended. We had one falling wedge, another falling wedge. This was eventually going to come down, in my opinion, and it did. Well, it currently is. I shouldn't really kind of count my chickens before they hatch, but I want to see something more constructive than this. This is like too sharp of an upside. This is like more exuberance, right? You had NFT NYC kind of go down. You had Cristiano what was his name? Cristiano Ronaldo sign with Binance with an NFT contract, all that kind of stuff. So there was bullish stuff on the news. But if you look at the macro, you look at like the Federal Reserve and like their consistent tapering, taking money out of the economy essentially, so making dollars more, scarce, therefore less investment. People are more risk off than risk on. And in the minds of a lot of traders and in the minds of a lot of hedge funds, crypto is actually risk off to them, which is hilarious because a lot of these stocks and everything are denominated in a consistently um, infinite supply, right? So it's really backwards. So in crypto, the reason why these assets were developed was because of the fixed supply, right? Okay, of course, not every crypto is a fixed supply, but Bitcoin is for sure. Anyway, um, you know, the supply of the dollar is consistent, it's infinite, while Bitcoin is stagnant. Yes, it's volatile, but that's because of the market cap. It's so freaking young. It is a young, it's trading like a very young tech stock. Okay, like if you know your history in regards to stocks and stuff like that, this is like Amazon back in 1995 through 1998. Okay, that's how young it is as an asset. Even though the price freaks people out, right? It's like, oh my God, it's 20.7, you know, or whatever. What's the freaking price? I can't even read this. There it is. Yeah, it's 24.73. Uh, People freak out, but this thing, there's only 21 million of them. Okay, so uh, yeah, because of the scarce supply, the market cap is allocated to those 21 million units. Therefore, you have this crazy number. But really, it's just about percentages, um, from my perspective at least. So anyway, I'm kind of going off on a tangent. So far, I am seeing this right here, this new kind of range kind of play out a more narrowed one. Okay, so obviously I'm biased to the downside, okay, due to what I'm seeing, like a supply line, a very, very, uh, what's the word I'm looking for? High sloping, I can't think of the word right now, but this supply line was broken, recently back tested multiple times as resistance, 1, 2, and creating now, and this is recent, right? Lower highs, lower lows, and now the EMAs are going red. Now, what trips me out, this is something that I don't really like to show a lot of people just because it's like too wild and freaks people out. Um, it's just so much data. But yeah, these are more like long-term moving averages. Like each bar here, for example, is half a day of price action. Okay, so when it goes from, teal to yellow, that's not good, right? Usually when it goes from teal to yellow, then it goes from red to teal. I mean, from red to yellow. So really, we're kind of like, and this is curling down. This is the MACD. This is on the verge. Now it could bounce and continue upward. That is a possibility. But what I'm seeing on the 8-hour is already a confirmation. So what I'm kind of looking for is divergence on the 8-hour myself. I want to see exactly what's the deal. Because, for example, now this is super hypothetical, so I wouldn't really put too much onus on it, and it's going to take a while. This is going to take days. But I want to see something like, a sloping, like an upward slope kind of develop here, okay, where the tip of the momentum is matched and it bounces. That's what I would like to see for a higher low situation. It just started, right? It just started going from, teal to yellow to red, and there was a cross down. So it crossed up, faked people out, trapped a lot of longs, hit resistance. Now it's coming back down. It's punishing the bulls. So what's happening here is the 8-hour is already crossing down. So if you go to the 4-hour, the 3-hour, yeah, the 3-hour is already crossed. This one, the 4-hour is about to cross. The 3-hour is pretty good too. Yeah, so an extension. So when these lines go negative, that just means that it's easier for price to move downward than to go upward. So when these major lines are above the 0 line, then it's just easier for price to pump, right? Easier for price to pump. But now we kind of had, the exuberance kind of wane. Let me go to the 3 hour just for consistency here. Let me take off the Heikin-Ashi candles. Okay, so let me go back here. Yeah, and we had divergence on the 3 hour. So kind of like what I had told you regarding like on the 8 hour, where I want to see, like the valleys kind of go from a larger valley to a lower valley. We're kind of having like a higher hill go from a lower hill. That's bearish divergence. So this is the opposite, right? So let me turn this red so it makes it easier. So we had a divergence. Now what exactly is divergence? That just means that price and momentum indicators are not congruent. So like here we had a higher hill and then a lower hill. Here we had a lower price hill and then a higher price hill. That's completely opposite, right? So when that happens on these types of indicators, particularly the MACD, that is kind of like a telltale sign that a reversal's coming. And so when you understand divergences and then when you understand pattern trading, you can kind of like pick up on what's happening. Yes, I know my EMAs were going green. The reason that these EMAs were going green was because the candles were finding support, right? So the 9 EMA was going from resistance, 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 then it flipped. You see these green candles? I have another indicator called BJ Superscript that kind of like color codes the candles for me, so it just makes it easier. So when price and candles find support on these 9 EMA and 21 EMA, then it starts riding it up. Now, that's why it turned green. But the big kahuna was actually this one here, the 100 EMA. So when price is below the 100 EMA, you have to be biased to the downside. That's just like how it is. Price has a downward momentum. So yeah, it had turned green, and I was kind of a little excited. But then when I saw this bearish engulfing candle, right, it wicked it for like a few minutes, like maybe like 30 minutes, and then it just completely just like, okay, it comes down. And then so there's this thing called bullish and bearish engulfing candles. That just means that like this, well, it's a yellow candle, but let me turn this off to make it easier. Let me turn everything off just really quick. Okay, so when I saw this, whatever, okay, when I saw this go bearish, the 100 EMA was kind of like coming around here. When it got rejected off the 100 EMA, and then it created a bearish engulfing candle, meaning that it completely outperformed the last bullish candle. That was a trend reversal. When I saw that, oh man, I wasn't trading Bitcoin. I was actually trading Solana. When that happened, oh man, and it happened right around here. Yeah, I opened up a short. It's 8%. 8%. So like, I like to chart Bitcoin because it's the biggest crypto market cap. But essentially, this is kind of like a precursor to what happens in the altcoin market, right? So like if you know where the trajectory of Bitcoin, you know where everything else going, right? So you can act accordingly. So I like to trade Solana right now. It's like a big cap, but it's more volatile. So Bitcoin, what was the percentage rate? That's from the top. Yeah, it's like 4.5. But look at Solana. From candle close to candle close, current 9.4. So that's why I'm constantly just talking about Bitcoin, because it's basically everything else. Crypto is a homogeneous market. So meaning that every asset is kind of connected, every asset has the same trajectory. A lot of it's algorithmic trading, a lot of it's just more so like industry standard type of things. So yeah, and also it mimics the S&P 500, right? So a lot of people there a lot of crypto enthusiasts and crypto junkies, they'll say that eventually the crypto market will decouple from the S&P 500, meaning that it has a completely different trajectory. The charts will look different, but as it stands right now, this particular cycle, we actually have hedge funds, we actually have institutions on a global level. It's not just American hedge funds, it's like Saudi Arabian, it's like, United Arab Emirates, we have Canadian, we have French, we have German, so Eastern Europe, I'm sorry, Eastern Asia. Okay, so this is a global market. Eventually, it will decouple from the S&P 500. But think about it: the United States is the biggest economy in the world. Of course, these new institutions that are coming in, it's going to reflect and mimic the S&P 500 for the time being. It's just not there yet in terms of a market cap. Like when Bitcoin hits maybe like a 50 trillion market cap, which is definitely possible, then we can talk about decoupling and stuff like that. But right now, it's not even like, I think it's like 5% of what the gold market cap is right now, which is nothing. Okay, so for perspective, the entire derivatives market is $1,000 trillion market. Okay, so these assets are like babies compared to traditional um, assets and stuff like that. But anyway, going back to it, I do expect prices to go down. Not gonna lie, because I was trading bearish, I'm glad it broke down. So far, we're seeing some bouncing right now, but like I said before, the EMAs are, acting as resistance still. We had a bearish, yeah, we had a bearish engulfing candle on the 3 hour. Usually, when that happens, we get like a rebound halfway within the candle itself, which also aligns with the 9 EMA. So from my perspective, what's going to be happening is price is going to be bouncing off the 9 EMA and the 21 EMA. So if you're a scalper, right? If you're a scalper, I don't recommend it if you're like not experienced at all. But if you are a scalper, there are so many shorting opportunities right now. Okay, so many. You already know, like you just wait for the lower high and you short. You wait for the lower high and you short. If price breaks resistance, you're gonna want to wait for it to retest. You're gonna want to wait for it to retest, right? And then you can short. You wait, and then you just hold it, and so on and so forth until it finds a base. But yeah, there are shorting opportunities right now. I mean, you can go against the grain, right? I mean, you can go against the grain and you can scalp long and stuff like that. It's super risky, right? But if you got the balls, I mean, you could still make money off of these scalps. I mean, that's just 2% move, dude. Like, my God. Volatility is super high right now, right? So if you shorted, like, you could still make 3%. If you long 2%, you see what I mean? So like, you can't get the exact tops or bottoms of these scalps or whatever, but the odds are in your favor if you're shorting right now. I'm going to be completely honest with you. But obviously, this particular short's already played out. We're finding a stronger base down here. Now I'm waiting for my SR. I don't really trade the 3-minute. I like to trade the 12 or the 15-minute. But yeah, okay, I see this. I'm waiting for price to kind of get rejected off of here somewhere, and then I'm going to be opening up a short, and then I'm going to like hold it all the way down to here, maybe like a 3% profit. But yeah, that's kind of like where my mindset is. I'm ranting now. Hope you've enjoyed this particular video. Feel free to subscribe. I'm gonna be trying to do these daily, like in the mid-afternoon. That's usually when I start looking at the charts and stuff like that, because that's usually when the carnage is either beginning or all that jazz. But anywho, I appreciate your time and thank you. Take care. Bye.